Hi everybody and welcome to the London session update with myself, Kathleen Brooks, on Wednesday, the 15th of May 2013. Well, the markets are fascinating. Volatility is still very, very high. We've got some major themes developing and it's a very exciting time to be in FX. Let's take a look at one of the major themes, and that is the resurgence in the dollar. Now, yesterday we heard from Fed member Plosser, Charles Plosser. He's a non-voter and he is a noted hawk, but he really touted the prospect that QE could be ended early. Now that sent the dollar higher again across the board, not just against the yen, but against the euro, the pound, the Aussie, which is now well below parity. But we look at the dollar index. So this is the dollar against its major trading partners. As you can see here, it is getting very close to those highs from July last year. Those highs at 84. If we get above that level, that is an incredibly long-term bullish development for this cross, which really opens the way for a move back towards the 90 level in the dollar index. So this could be the beginning of something special for the dollar, with the dollar being treated very much as a growth currency. So it's moving higher along with stocks for as long as the US economy continues to do well. But the dollar could be the real winner out of the US asset classes, because whereas stocks may be sensitive to the end of QE and rising bond yields, they're not yet, but they might be in future, that could also help the dollar to thrive. So we're really watching that, and that could have a major impact on dollar movements going forward. Now, also the pound very much in focus today. We've just had a labour market report, which was better than expected. And that caused a bit of a relief rally in the pound. But for now, what we're seeing, 152.40, that is the base of the daily Ichimoku cloud, acting as stiff resistance. And let's take a look at this hourly chart. As you can see here, we did drop below 152 at one point today, but we were looking incredibly oversold. So in the short term, a pullback seems to be on the cards. However, we wouldn't be surprised if we still ended the day lower in the pound, largely because we have the Bank of England's inflation report that is due at the end at 10:30 today, London time, 5:30 a.m. US time. That could really boost the dovish credentials of the Bank of England as we wait for new Governor Mark Carney. So what we're seeing here is the pound, yes, it's in recovery mode after that better than expected labour market data, but the prospect of more QE from the Bank of England could really just use those better levels to get in for a short position. So do watch out for that. Key resistance 152.40. Right now support 151.80. So everybody, thank you so much for joining. Please do join us soon for more. Thank you.